Hey there, YouTube family. Welcome to the Stocks with Josh show. The markets were a wild ride today. I mentioned in my last video that for these markets to remain bullish, we needed a very tall-bodied green candle with a little wick and a little tail at the bottom like we got on Friday. And instead, we got a gravestone doji. A gravestone doji is a classic bearish reversal candlestick pattern. It's formed when the open, the low of the day, and the closing price are all really near each other, and it's got a really long wick on top. This was a bearish signal. It meant that the buyers lacked conviction above 3,900. We got to play it out, see how it goes. What did I do with my money? Well, I finished completely adding to my SQQQ long position. The SQQQ is an inverse ETF on the QQQQ. It means that when the QQQ goes down, my SQQ goes up, which means I'm making money when the markets are falling. It's a hedge against my long-term investment portfolio. We've talked about it many times on this show. In addition, I added to some of my other puts. I increased my position. I sold some longs for profit. We're going to see how the rest of the week plays out. It's going to continue to be choppy waters. That's what I've predicted for January. It's going to be some choppy waters. I think that things are going to go more south in February. We got to take it one day at a time. Today, I'm going to be talking about Google, Bing, and AI. Who will rise in the coming days? I'm going to have a brief conversation with you guys about these two powerful companies, as well as how technology may be changing the business of search. And of course, we're going to look at the charts. We're going to look at the trend analysis, and I'm going to give you guys price predictions. Go ahead, hit the like, say hi in the comments. Stop trading alone in 2023. Get on board. The Stock Josh family, you do that by hitting subscribe and all notifications on the YouTube bell. But please remember, anything I say is not a suggestion for you guys to buy, sell, or hold. This is for education and conversation purposes only. Let's get into it. Okay, most of us have relied heavily on Google, and these guys have overwhelmingly dominated the search space for the last 20 years. In total, Google captures 92% of all internet searches, and over the course of that 20 years, they have indexed more than 1 billion web pages. Google has become such a powerful brand that the name itself became a verb. It's synonymous with search. For example, I Googled it. Google wins because Google is fast and relevant. They deliver millions of results in a fraction of a second. This is due to billions of dollars spent investing in infrastructure. This gives Google what appears to be a defensive moat in the search engine business. A moat is a trench all around your castle. The concept in business of the moat has been made popular by Warren Buffett. He describes it as a competitive edge that is not easily overcome. Historically, castles have a large ditch. They're filled with fortifications, crocodiles, piranhas. These are their defenses. And the bigger the advantage or the cost to compete with a business, the more protected their market or their brand is, thus creating a larger moat. So who is competing with Google? Well, back in the day, they rose to power by crushing Yahoo and a company called Alta Vista. Let me know in the comments if you ever used Alta Vista. Today, they fight off Bing, Baidu from China, Yahoo still, Yandex from Russia, the company Ask, and DuckDuckGo, as well as many, many others who are trying to crack into the search business. How does Google, though, stack up to these other companies? Let's take a quick look at their fundamentals. Google's market cap is 1.13 trillion, making them the fourth largest company in the world. These guys made $257 billion in 2021, and their current PE ratio is just 17.68, compared to a 22.89 average for the rest of the S&P 500 companies. These guys have the strongest balance sheet in corporate America, super high profit margins. Yet in 2022, they went from $151 to the low, sad price of $87. That was a monumental 45% drop for a company that had returned 25% returns for over a decade. From a fundamental view, it's my opinion that Google is best in class, blue chip company, currently positioned as a value investment. At the end of this video, I'm going to give you guys my support and resistance on Google, as well as my investment view on the company. But before we do that, let's take a quick station break for my Moomoo affiliate, Click the link in the top pinned comment if you're looking for a fresh start in trading in 2023. These guys will give you up to 15 free stock, and for a limited time, there's a chance to win $60,000. They are a licensed, registered, and insured exchange out of Palo Alto, California. They've got the free level 2 data, a free stock screener for finding hot stocks. They have the lowest retail margin rate of any retail exchange, 8 order types for profit taking and capital protection. They're available for your phone, tablet, and your computer. They're only available in the US, Australia, and China. Plus, they have the Stock Josh family chat group. You can click the link and get the free stocks to invest and win. Okay, back to Google. Google is amazing. End of story. Bye, Google. Video over. Well, it might not be that simple. We need to have a chat about Bing and AIs like ChatGPT. Before we break down the AI factor, let's take a look at Bing and its fundamentals. Bing is the number 2 search engine in the world. They're owned by Microsoft Corporation, ticker MSFT. They are the warriors trying to swim through the Google moat and scale the Google infrastructure walls. How do they, though, compare to Google? And will they get crushed like a bug in the face of Google's dominance? Bing is in second place with a mere 2.27% market share. These guys are a little bitty company compared to Google. They started their journey as MSN Search, then they became Windows Live Search, and finally they rebranded as Bing in 2008. Bing needs to 24x to reach the level of Google today. Now, if it was a crypto, that would be no big deal, but in the world of business, that's a big jump. I found this humorous that the number 1 subject that's searched on Bing was Google. People would search Google, they would open Google, and then they would search the topic they were interested in. Ouch. That's got to be painful for the engineers to see over at Bing. Google has the advantage of having so many users input data that it enables them to provide superior search results, because a search engine produces good results by calculating the data of mass inquiries. More of that moat benefit. Now, Microsoft has fallen around 39% since hitting a high of $349. They did that like every other company at the end of 2021. It hit a low recently of around $214 in November of 2022. Microsoft has a current market cap of $1.68 trillion, making it the 3rd largest company in the world. Their PE is a little bit high at 24.24. That's a bit higher than the rest of the S&P 500. In my opinion, there's a little room for that to come down still. But why are we even comparing a 2% market share Bing with Google? Well, because even though Google is a giant today, perhaps they have more to lose than gain. And with the rise of AI, Microsoft, they may be quietly making a move on that number 1 spot. The CEO, Satya Nadella, if I pronounce that correctly, has promised to transform Bing to position themselves as the future leader of search. They dropped $1 billion into artificial intelligence in 2019 by buying the company OpenAI. These guys are the builders of ChatGPT, which has been the fastest growing software in the last decade. This move was a Hail Mary, nothing to lose pass. Bing would either thrive or die. And ChatGPT is free, and it's losing millions of dollars a week, and they couldn't be happier. I want you guys to check out this video to better understand what ChatGPT is.
It took Netflix more than 3 years to reach 1 million users, but it took ChatGPT just 5 days. Techies everywhere short-circuiting with excitement. OMG, ChatGPT is about to make my life 10 times easier. But what is it? ChatGPT is a state-of-the-art natural language processing model developed by OpenAI. It is specifically designed for conversational language and is capable of generating responses to input in a way that mimics human conversation. That description, by the way, comes from ChatGPT itself. We asked. Think of it as Google, but with more human-like features. Plus, it's free.
You can ask a very specific question like, give me 5 tips for how to use my camera. You can ask it to write a poem or a play or a song. It really can kind of comprehend almost any request. And then it spits out language that sounds like it was written by a human being.
We also asked it to write this entire script, which it did. But it didn't take into account that we'd need our expert to weigh in.
A lot of the headlines are that this might make Google obsolete. Do you see that possibly becoming reality?
If I were Google, I would be a little bit nervous just because this interface is sort of the thing that everybody has wanted forever. I mean, this is the closest thing I've seen to like the Star Trek computer, where you say what you want and it responds instantly.
For better or for worse, many educators are already worried about how ChatGPT might become a surrogate student when it comes to homework.
Kids could use this to grade something which a teacher could probably not identify as not having been written by a human.
Non-students can use ChatGPT for other tasks. Here's ChatGPT drafting an email to my bosses asking for a raise. OpenAI, the company behind ChatGPT, says it's using this technology responsibly. The bot won't answer any salacious questions, for example. But this is only the beginning.
Where is this going to go? You know what I mean? Are we going to have this thing filling out like dating profiles now? Am I going to fall in love with ChatGPT?
I mean, that's the thing. It's like there's no telling really where it's going to go from here. And like he said at the end, you know, ChatGPT is saying that they are, you can ask it some like salacious questions and it'll say no. Yeah.
All right.
Oh, boy.
Wow, very interesting stuff. They need you guys to gather and refine data just like Google. That's why they're operating for free. Every time someone searches ChatGPT, it gets stronger. I want everybody to never forget that you are the value and you're the backbone of the American and the global economy. No matter what they say, they can't do anything without our cooperation. We're the ones that make these companies rise or fall. That's why I say power to the people, my friends. Once ChatGPT reaches its goal of gathering enough user data, it is believed that they intend to integrate into Bing Search to take Bing and Microsoft to the next level. Change, technology, and people. Don't ever underestimate the rise of the underdog. It's not there yet, though. Google is still top dog, and I'm long Google. But I'm watching Bing, I'm watching ChatGPT, and I want you guys to let me know in the comments what you think of Google, Microsoft, Bing, and ChatGPT. Who will win the search engine race in the next decade? Let's jump into the charts, and I'm going to give you guys the entry and exit, support and resistance for both companies. Okay, Google analysis. We got to watch for a breakdown in the Google price below 86.40. That's maximum support. If we lose that level, it's my opinion that Google will go to 77.42. Resistance above is at $95. If we break through, we should see 99.12. But if we got down to 77.42, I'm going to tell you I would load up for a long trade. Google has many powerful years ahead of them, especially with their cloud business and their YouTube business. Bing analysis, ticker MSFT, Microsoft. Breakdown potential at $217.39. If we lose that level, we should fall easily and find support at $199.89. That would be an 11% loss from today. Daily trade volume on Microsoft has popped 63%. This has been mostly selling momentum. The charts are more neutral to bearish on Microsoft, in my opinion. Resistance above is at $234.13. If we broke through that level, we could possibly see a $250 Microsoft. That would be an about 11% gain from the current price. So 11% up or down, we are right in the middle of the risk range. Stop what you're doing and subscribe to see more videos like this. If you know what you want, then hit all notifications on that YouTube bell. Peace and blessings, my friends. See you in the chat.